Hey guys, welcome back. In today's video, we are talking about the $50 per share, the stopping of dark pool, the early squeeze stage, and many more in this video. Now, today AMC is up 8.44%. We closed at 1.67. So this is updated, but the last 12 days of trading for AMC now has been 10 days green, 2 days flat, and 0 days red. So we are seeing a very good start to the month of April for AMC. We have already seen why Q1 has been exceptional. Q2 is only going to get even bigger, and investors all want to buy into AMC. Some of the things that we have to look out for, and this is something that I've said in the past before, and I actually prefer this, which is we may be seeing this baby step all the way up to 566. But because of the fact that there were so many people who kept shorting around $1, when they get liquidated and margin called and have to cover their shorts, we could get to 556 and go up even higher with a very quick and explosive move. So recently we've seen AMC going from that 0.93 low to where we are now in a span of 19 days, and you can see here we're up around 74% and higher. Now this was done, like I've said, throughout 19 days, and this is something that I want to highlight is very important, which is we didn't do this in just one day. We didn't see one candle that allowed AMC to go up 70%, but rather we saw days when we went up 8%, 12%, 1% even, some days where we even went flat, and we gradually got to this stage. And this is very important because I prefer baby steps over big steps. Now, the reason why I say this is because in the past before, we've seen how when AMC goes up 15, 20, and 30%, it instantly gets halted. And right after it gets halted and resumes trading, you see how it starts dropping because we allow the shorts to have time to come up with preparations. And we've always known that these halts, whose aim is supposed to help out the retail, has always been used to actually help out the institutions. Now, if we're seeing AMC go up 5% every day, 8% every day, this is something that if it gets halted, it would be extremely stupid, because then we know that the regulations are just helping out the institutions without even trying to hide it anymore. And so far, we haven't seen AMC being halted, and we've seen AMC up 70% already. So that's why I actually prefer these baby steps. But at one point, when the shorts gets margin called and liquidated, obviously there won't be any baby steps, because if they have to cover the billions of synthetics, it would push AMC up so much higher. And you can see, here's some fun math. If AMC only rises 6% a day for the next 60 days, we'll be sitting around $50 a share. So this is why I've said even with baby steps, we're still able to see AMC go up higher. And 60 days for AMC would be nothing. We've been in this for the last 5 years now. What would 60 days mean to us? And I'm sure everyone will be happy to see AMC go up to $50. And even so, when we do go up to $50, we will be seeing many short sellers to be facing that liquidity stress, and obviously the talks about covering their short position. And so, like I've said, I'm very happy with the baby steps that we're taking, because even with baby steps, we're able to still get that big increase in price as we see the days go throughout. And you can see here, this is on top of everything that we've just said. So we've seen AMC go up 70%. We've seen AMC having these 8% days, 12% days, 6% days. Something that still needs to be talked about is the fact that despite all of this, we are still met with 70% off exchange. And so this is something that's very, very important. It's just how much volume is actually being hidden away. We've already known how off exchange has damaging impacts towards the price of a stock. We've seen how that's affected AMC in the past before. So now the fact that AMC has already done this well, the fact that we're seeing AMC growing all of these days, is still met with off exchange. It truly talks about how much higher AMC should be moving. It talks about that even these 12% days really should be 30, 40, 50% days. Now, of course, this kind of contradicts with what I was talking about with baby steps, but we have to understand is that just because I don't want to see AMC get halted, it doesn't mean I don't want to see AMC have true price discovery. It's just that right now, because of the off exchange, we're not able to see price discovery. And when we do see AMC go up in a large in terms of 50%, 60%, we are then met with holds. And so we are just in a really difficult position. And this then just talks and highlights about truly how stuck these shorts are and just how much effort they're using just to prevent AMC from going up in price. Now, one of the things though that we may be looking forward to is the fact that with more institutions going long AMC, they're not going to idly stand by forever and let this off exchange keep AMC down. So one of the things we've noticed is that, of course, it isn't just the retail buying, it's obviously institutions as well. Now, this is important because we have to understand is that institutions want to buy AMC because they realize the long-term objective, they realize the long-term potential for AMC, and hence why they want to start accumulating early. They want to make sure that they can get into this as quickly, as low of a price, and as early as possible. But once they're in AMC and they realize that AMC being so undervalued is not going up in price because of the dark pool, we may actually be seeing these institutions then taking actions against these market makers who are abusing dark pool to manipulate the price of AMC. So that may be something that we can obviously look forward to. If we take a look at some of the technical analysis, you can still see the 3-month chart on AMC should have shown you everything you need to see for even a short-term reversal. So what we're seeing right now is massive volume, tightened spread, and could even be super early in the reversal. So this is still kind of the early stage. This is still not kind of the end of this small run that people are talking about. I've already said is that this isn't just kind of a normal run. This is people realizing, especially with what's going on, just how undervalued AMC is. And we're seeing, because of all the collaterals failing, how these short sellers are struggling to prevent AMC from going up in price. You can see from other people as well, from AMC goes 60% from the bottom. This confirmed that we are entering early short squeeze stage, similar to 2021. So we talked about this before with how we're seeing the data all matching up. We've compared the price action of AMC back in 2021 before it had a run up to where we are right now. And we're having that same movement, not exact by the dot, but we're seeing very similar movements. And so this is what we've said with how this is still the early squeeze stage. This is still the early stage for everything, but we're already seeing how well AMC is doing. And on top of this, the 1.44% borrow rate, the multiple consecutive green days, the high percentage move up from all-time lows, you can see people saying it feels like 2021 all over again. And this is what we've said. When you take a look at the comparison of the data, when you take a look at the charts, when you take a look at the short interest data, everything is starting to match up. Everything is starting to show us exactly what happened back in 2021 and why we'll see this happen again now. And this is what we want to wait for. This is exactly what we want to see. And it will only be a matter of time until we see that next short seller of AMC to announce bankruptcy, to announce their short positions is getting inherited by others, and then it's going to create that whole dominoes effect, and that's when the short squeeze will begin. We'll also take a look at this, AMC ripping 6% while IV already sitting near 100%. So we're seeing the volume, this is what we talked about, we're seeing how the options are being played. And this is important is because if we are heading and able to not only close above 150 like we have done today, but at the end of this week, we're able to close above 150, we could be seeing something extremely pivotal. But not only that, if we're able to see AMC go and close above $2, then that would really be the cherry on top. That would be what we want to see. And so if we're able to see these two things happening, so one step at a time, the first is if we can see AMC close and stay above 150. And then on top of that, if we're able to see AMC close above $2 by the end of this week, we're going to be seeing that pressure being exerted on AMC. We're going to be seeing some shorts be facing some liquidity problems at the end of this week. So you can see AMC just hit 160 with no news, heavy volume on 150 in the money calls equals pressure building. This is how it starts. Price, when it's bigger than max pain, the market makers forced to hedge the momentum build. And that's what we want to see and is what we're keeping our eyes peeled on right now. If we take a look at another technical factor, you can see the unusual squeeze event just triggered. So this is using other people's technical analysis, technical indicators, where it's essentially just getting a score. It's talking about how likely a stock is going to squeeze, how likely what the price is going to. And so this isn't something that is a definite. This isn't something that is 100%. But we've said with the fact that we're seeing so many technical indicators, so many technical analysis all aligning right now and showing one thing, it starts to make sense and it starts to show us what is about to happen. Furthermore, the timing is everything, because on top of the technical analysis we just talked about, we also have multiple fundamentals as well. You can see, watch out for the Odeon completion deal. So what we're talking about is right now, there are three major catalysts lining up for AMC. Firstly, the Odeon debt restructuring. So this is obviously going to be the balance sheet relief, the 150 million share offering completion with the capital secured and further on to their debt, the potential AMC X Netflix partnership where that's going to create more revenue. All of these fundamentals right now are also lining up with the technicals, and this is, along with the technicals, we're going to be seeing more of a reason, more of an incentive to attract investors into buying AMC. And so you can see how AMC right now is already attractive enough for capital to be flowing in. But on top of everything else that AMC is about to provide, this is then going to get even more capital. So this is why I said we're not going to stop at where we are right now. This isn't just kind of a small thing. This is going to lead to a massive, massive run for AMC. And you're seeing how people are changing their opinions. What we have here is Zacks Equity Research, and they talk about AMC, and they talk about how well AMC is doing. Furthermore, you can take a look at this about their estimate on AMC's EPS and their projected revenue growth. And this is what we've seen. We're seeing Zacks Equity Research. We covered them in the past before. Essentially, we talked about how they released the article a few months ago talking about AMC not being a good stock, AMC, stay away from AMC. So something along the lines of that. And now we're seeing them give an extremely good estimate on AMC, and we talk about how well they're talking of AMC. And that's what we want to see. This is the exact thing AMC has been trying to do and have been setting up, and we're just seeing that come into fruition right now. We also have to realize the fundamentals. The bulk of AMC debt will be paid off with short sellers' money. When they get short squeezed during this market collapse and get margin called because they have no collateral value to maintain their derivatives. And we've already talked shortly about this as well. We talked about how they're struggling. We talked about how banks are actually trying to offload some of their derivative positions, their derivative swaps. And it just goes on about how all of this leads to one thing. They are faced with some toxic positions that they can't cover that could easily bankrupt them, and that being AMC and GME. And this is an opinion that some apes have, but it goes on to talk about just how much of a situation we are in right now. You can see we no longer need AMC MOAS, it would be gravy. Being this low, all some need for life-changing wealth is $50, some $100, and hardly anyone needs more than $200. But because our opponents screwed around so much, we may see numbers many times those with ease. Now, the reason why I have a different opinion on this is because everyone is obviously in a different situation. Some people have bought in a very long time ago and they haven't averaged down, which is completely fine. But there are some people who obviously have bought a lot when AMC was at $1. So obviously they have different needs for price target. But what we do know is that because the hedge funds have already created the situation so much, yes, some people may be able to be financially free when AMC reaches $200. But because of the situation we're in, they're very likely to not sell at $200, but wait for $2,000, wait for even higher. And that's what we have to understand. We're also seeing the GME net call premium breaking out, another big sign of what's going on. We talked about the AMC calls. Now we're seeing the GME calls. You're seeing how all of these volume are starting to add up. You're seeing how all of these volume are showing to one thing. The people who have been naked shorting are struggling to keep it up right now. And you can see I'm expecting derivatives on AMC and GME and silver to unwind. Big banks are desperate for liquidity. They need to exit. And this is just with everything that we talked about, but with everything that we're also going to be looking at just right now. Because firstly, we're seeing this. So the US Doge service has talked about this, and they post this picture, which is of course Nicole Kidman. And this is people speculating because of the AMC ad. It could be something to do with AMC. So this is the first sign of people trying to offload their derivatives because of the efficiency systems. But then we're seeing this. The SEC ends the pattern day trader rule. Now this is a big thing, because previously this was the barrier to entry for people who wanted to day trade. You needed $25,000 in your account for you to be day trading. Otherwise, you're not able to make X amount of trades per day. And now they have removed this. So what they aim to do this is to actually increase probably the liquidity. And we talked about how they are struggling for liquidity, and you're seeing how they're trying to remove things, and that allows them to then provide liquidity. We're starting to see the things that are obviously mixing together. We'll also take a look at this. This is something we talked about for a very long time, but it's still ongoing, which is the private credit. You can see banks tally 100 billions of private credit loans as calm urged. So we already know the private credit situation is big, but what you don't know, or some of you may know, is that they are creating credit default swaps, CDS, so that they can bet against the private credit funds. Now, this may sound familiar to you because this is exactly what happened in 2008, but this time with private credit. So we're looking at the same thing happening again, and it looks like we're just going to be seeing 2008 all over again. And this is how we talked about with how we're going to be start seeing the unwind, we're going to be seeing the collaterals disappearing, and we're going to be seeing the MOAs happening. As always, now this is Financial Advice, and I'll catch you guys next time.